1 week out from Black Friday and a shortened holiday shopping season, Gap and Wal-Mart seeing higher-end consumers coming to them for value as Target sees weakening sales and inventory piling up. Joining us now is Dana Telsey of Telsey Advisory Group. Dana, welcome to the program.
Thank you so much for having me.
Compare Target to everybody else. What went wrong there?
48% of Target sales are discretionary. They had elevated promotions, higher costs. Didn't work. You look at Walmart, which has 60% of their sales coming from essentials. And when you think about discretionary, look what you just mentioned. The Gap is gaining some momentum right now. Look at TJX, same thing. They're gaining some momentum too. So that value shopper where there is style and product is working.
Is there an execution story there as well? What is the Gap doing right?
I think a couple things. I mean, Richard's phrase is perform while you transform. But one of the things they're doing right is the consistency of looking at the product and really elevating it today's times. Look at the wide leg denim jeans. They are remodeling some of their stores. At Old Navy, the kids business is important, and the kids business weakened in this quarter given the weather that was out there. Coming out of the quarter, kids strengthened. And so I think off-price value and where there's newness and innovation, consumers are going. So you have that in what's happening with the Gap brand and at Old Navy.
I want to get into policy and all of that, but what is newness and innovation right now? And we talk about this. Is it launches? Is it limited edition? Is it wide leg pants that are going to be in style for, you know, another 6 months maybe?
No, typically denim cycles can be 3 years.
Okay.
So they can be
Sorry,
a little bit longer.
I take it back.
No worries. But when you think about innovation, what's new and different? What about the closed-toed shoes at Birkenstock? Selling at full price, people are buying the sandals and they're buying the closed-toed shoes. When you think about the wide leg jeans, there's a lot in footwear. Look what Hoka's doing with the new colorways at Hoka. It's interesting. Same thing at On. But you know what? You marry the product with the physical space. Look at the new remodels that are opening. If you walk Lower Fifth Avenue, the new Gap remodel, it's colors, it's got punch. You take a look at the Abercrombie remodel. They expanded the men's area. Look at the new On store. So we've got newness in product, newness in channel, and you need to have value.
Maybe Target just needs a new dog, and then they'll be just fine. But there is
work to be done.
Okay. Meanwhile,
it's more than just the dog.
That's probably more than just the dog, given some of the performance. But there is this question about how exposed some of these retailers are to the potential of tariffs, especially if their whole rebirth depends on the ability for fast goods that they can get manufactured and brought in.
When we had tariffs the first time, everyone went to diversify their sourcing out of China. It's happening again now. Probably the one who's talked about it the most is Steve Madden, taking their percentage of goods from China down from 50% to 25%, hopefully in almost a year. Gap said it on their call last night, around less than 10% of their goods come from China. Where else are people going? They're going to Mexico, they're going to Africa, they're going to Vietnam in terms of where goods are going to be. The end result, though, and National Retail Federation talked about it, if we have these tariffs, you're going to have an impact to consumer spending that can approach nearly $80 billion. And what it requires in the apparel area, if you're going to have increased costs passed on to the consumer, can be price increases of low double digits. That's a concern across the board.
Are any of these retailers talking about coming back to the United States? Because what President-elect Trump is talking about is basically a carrot and stick approach. I'm putting up the walls, but you're going to get a 15%, potentially, corporate tax rate if you produce in USA.
Now, some of them have mentioned some items coming back to the USA, but basically it's Mexico, it's Vietnam, it's even Africa where people are going. The labor costs are lower. They have the labor to be able to make the goods and the expertise of it. That's why, the reason why everyone's in China, there is no China like China in terms of the expertise of how they make the goods. It will be a problem and a big topic of discussion throughout 25 if those tariffs get enacted.